headline from the Reserve Bank this week was Reserve Bank has raised repo rates by 0.25% to 6.5%. What does this mean for you and me? Well, first it means it just got more expensive to take a home loan or a car loan. Here's how. Reserve Bank has increased the repo rate, which is the rate at which the Reserve Bank lends to banks when they need money temporarily. But actually this rate is just a signal. Banks link many of their loans to the repo rate. So starting today or this week or next month, interest on retail loans like home loans and almost all corporate loans are going to rise by 0.25%. Now, as non-bank finance companies, like the Bajaj Finance or Shriram Transport, they start finding that bank loans to them are getting expensive, they will offer higher rates on their fixed deposits, which they get from customers. Eventually, banks too will have to raise their FD rates to retain their customers. In fact, Kotak Bank has already done that. So if you are going to put some money in bank FDs, just wait, most of them are going to increase their rates. Okay, what next? The Reserve Bank surprisingly has not said whether it will raise rates once again or stop its hiking cycle here. This is contrary to expectations because most economists and bankers had expected the Reserve Bank to signal that it is done with rate hikes on Feb 8th. Now, the Reserve Bank's reason is that inflation is still a threat. It sees inflation at 5.6% in the current quarter, falling to 5% in April-June quarter, but rising again to 5.4 and then 5.6 in the second half of FY24. Now, ideally, for savers to benefit, a central bank has to keep interest rates at least 1 or 1.5 percentage points above inflation rate. Otherwise, why would you save? Because inflation will eat up your savings. Now, this difference between the repo rate and the inflation rate is called the positive real rate. Right now, repo rate is at 6.5%, inflation 5.6%. So RBI points out that the positive real rate, the difference, is only 90 basis points. Pre-COVID, this real rate used to be over 2 percentage points. So, surmising from what the RBI said, at least one more rate hike looks possible. The other surprise in the Reserve Bank's policy is RBI's growth forecast for next year, FY24, is 6.4%. Now, I did a poll of economists and their average GDP forecast is 5.8 to 6%. We will know who is right only 18 months from now. Okay, the Reserve Bank seems to be higher than the market expectation. Next, the Reserve Bank has also had a bunch of smaller but very interesting announcements. First, banks can't charge unreasonable penalties if you as a customer delay your interest payment. Yes, they can levy a penalty, but they can't add the penalty to the principal because in that case, you will be paying more every month for a delayed payment you made once. So a set of guidelines on this is going to be announced by the Reserve Bank. Next, the Reserve Bank is also going to make it possible for foreigners when they land in India to use UPI when they make payments. Maybe it will become possible for, in a foreign phone also to download the UPI and connect it to some wallet or something. All the details are still awaited. And finally, the Reserve Bank is also going to issue rules for green deposits and green bonds. That is, banks can start collecting deposits that will only be lent for projects that won't harm the environment. Banks also have to make more disclosures about how much of their loans are for climate-hurting projects. So, apart from cooling the inflation, the Reserve Bank is now all set to cool the environment as well.